My wife has, well, to make the train station, we're having to get to throw the owl, so I was trying to listen. He would, you know, we found him, we found him, sure. You're gonna.
Give it another minute.
And so we're ready, but we're.
I'm gonna introduce him and then let him. I think I'm gonna go there too.
Some people not, there were only, there were few copies of slides, but every one of them have able to share.
Good evening, everybody. We're gonna get started, so we can all get to bed at a reasonable time tonight. So I think most of you know me. My name is Victoria or Vika Wood. I'm the town administrator. Thank you everyone for being here. So this evening, we're gonna have, kind of a two-part presentation for you. Several months ago, the town hired Mark Roy, who works, he has his own company, Blue Star, and the select board hired him to assist the town to go through, the town had lost its auditor, and so to clean up our books and to really get us in the right direction with all of the grants that we've received and all of the work relative to the storm damage that we have going and the stone pier. It was a good time to hire somebody to assist us with the finances, to really try to get us to understand where we are. And then, as far as the future and where we need to be, have a really good idea as far as where our finances stand, especially since we currently don't have an auditor, putting us in a good position to have our books cleaned up really well, so then we might be more late for an auditor. So we're gonna have Mark do about a 20-30 minute presentation about the work that he's been doing. And then we'll give a few minutes for an opportunity for people to ask questions. And then we're gonna turn it to the finance committee that has spent the last little over a year working really hard on trying to figure out how we can fit all of the projects that this town needs to do in without pushing all of us off this island by having the taxes go up too much. So for now, I'm gonna turn it to Mark, and then we'll get a chance for the finance committee to speak. Thank you, everyone, for being here. I don't know if you want this or if you're louder enough speaker.
In case people can't hear me, I'll use it. Hi, my name is Mark Roy. I have a company called Blue Star Accounting. I'm out of Lewiston. I'm a CPA. I've been doing accounting for about 16 years now, municipal accounting, and I used to be an auditor for municipalities and schools and counties, and then I stopped doing that and I started doing business management for municipalities, schools, and counties. And so what I do, I'm not an auditor anymore, right? So you didn't hire me as an auditor. Instead, what the town hired me to do is to actually work as kind of an outsourced consultant and outsourced controller to come in and clean up the books and really help with making sure that the internal controls are good, make sure that the charts of accounts are good, make sure that the processes are good. Because really what happens with small towns and municipalities really all over the state is that the accounting systems are not very good. What ends up happening is small towns just don't have the resources to hire professionals, professional accountants, to manage their books, right? They end up hiring people that, you know, unfortunately just don't have the skills to do the accounting. Not that, you know, it's anything that people don't intend to do. It's just that unfortunately, that's the end result of when you want to raise taxes at the lowest amount and then pay the lowest amount. That's what you end up getting, right? You end up getting the lowest common denominator. So it's hard to find somebody if you're not going to pay somebody the highest wage, right? You're not going to find somebody who's a CPA to come out here on Spiegel Island at CPA rates that they pay in Portland to come and work for Spiegel Island at a full-time for full day job. So my job, or at least my business, is to say, well, I can do that for multiple municipalities, right, and make my wage at doing it part-time. So instead of doing it full-time for one municipality, I do it for multiple municipalities, and that's essentially benefiting you, having the benefit of having a professional being able to look at your books without actually having to hire me full-time. And you still have a full-time bookkeeper who then I also help to train and help to try to improve their skills, and then your books start to improve, hopefully over time. And then usually what ends up happening is there's turnover, obviously, and I help to kind of bridge that gap as well with most of my clients. So often what happens with most of my clients is that they'll have some bookkeeper or treasurer for a while. That bookkeeper or treasurer will learn some skills and then they'll go away. They'll hire somebody else who doesn't have any skills, any others, you know, they'll hire exactly what they had before. There's somebody that didn't have any training or education, and then the whole process will start again. But the difference is with having me as a consultant is they don't lose that knowledge. They have somebody that they can rely on to say, okay, well, you know, we still have the foundational system, we still have the foundational knowledge, and we have somebody there that can train somebody who's going to still be here on a full-time basis to do all the data entry and to do the day-to-day face-to-face with customers, but then have somebody come in on a periodic basis, usually monthly, to do basically the controllership. Look at books on a monthly basis or on a quarterly basis, do the adjustments, make sure the books are cleaned up, and make sure that any sort of interim reporting is reliable and timely. Which most municipalities don't get when they don't have that type of when they don't have this type of service. So that's kind of my overall business plan that I do with most of my clients. What I've been doing for the last 6 months, right, since I've been hired, the focus for the last 6 months was the town had their FY24 audit just finished in September. So the town wanted me to kind of review the audit and then clean up FY25's books and have them prepped to be audited, because again, I'm not an auditor, or I'm not going to be auditing the books. And then get them ready. And so what you see here in front of you are the budget to actuals. They're not the full financial statements, they're just the budget to actuals of after I've cleaned up the FY25 books. I had to do some restatements to the audited FY24 financial statements, and then I cleaned up all of the FY25 books. Given the information that I had on hand, there's still some minor tweaks that I have to work, that we already know. There's some stuff I have to do. Most of it has to do with some of the school accounts but they're minor stuff. The general fund pretty much is set. And then, the task going forward is really just to, work on, cleaning up FY 26, which we're in right now. And, have everything set so that, we're on a day-to-day path, right? That periodic controllership type of, path. Right, so cleaning up where we are today, so that then the select board and the finance committee can benefit from timely interim reports. So that they don't have to wait, you know, like they did this past year, waiting for FY 24's audit to be done. For them to know where the fund balance was a year after the financials, after the year was closed. So that's generally what my role is and why the town hired me. The entire point is that they can have better information so that they can make better decisions. Other than that, I was up here really just to answer questions about the FY 25 budget to actuals, if anybody really had anything about that. Which you have in front of you, because this is really the first time you guys can look at the unadjusted or the preliminary budget to actuals. We haven't finalized them, but these are close to gonna be the finalized budget to actuals. And if anybody had any questions about those, or if anybody had any questions about my role in general, I can answer some of those questions.
Mark, can you briefly explain how you've assisted the town in transitioning from the one general fund that we had with everything mixed in, and that's how historically the town has worked, to the recommendations you've made and the changes that we're gonna be doing moving forward and the
Yeah.
benefit of that?
Yeah, so that's an example of where, you know, the town wasn't using, because of the lack of understanding of fund accounting, which is governmental accounting. They didn't understand, or the bookkeeper that the town had in the past didn't understand really how to use the software that the town pays for, which is a fund accounting software. And probably was because you didn't really understand how to do fund accounting in general. And so what was happening was all of the different funds that the town had, which are many, right? You have the general fund, and then you have a whole bunch of different special revenue funds, and you have a whole bunch of different capital projects funds, which are all of your reserves. You have the school fund, which is its own separate fund, and you have the school fund itself, or the school itself also has separate funds, right? The grant funds, the federal grant funds that the school has are actually separate funds. All of those are separate funds. Well, all of those were being accounted for in one fund within the software, the accounting software, which itself isn't, you know, it's not, you know, you could do it if you wanted to, right? If you understood fund accounting and you wanted to, you know, take a lot of time and really do stuff inefficiently. But you have this, you were paying for this accounting software, this fund accounting software, and weren't using it. And then what was happening was the town was getting all of the accounts messed up, and the accounting messed up, which was causing a lot of delays in really figuring out, well, what did we really have for fund balances in, for example, your reserve funds, right? So your capital reserve funds, or in your general fund in general, what was your fund balance? What was your school's fund balance? This is one of the reasons why it took the audit so long. Because what had happened was, see, what happens in general with most small towns is that they were really relying on their auditors to clean up their books, and they're not really supposed to do that, right? Your auditor is supposed to be an independent auditor, right? They're not supposed to be closing your books. That's the function of the town or of the accountant. The auditor is supposed to take closed books and just audit them. So what's happened in Maine or in governments small governments, now is because of the lack of skills, knowledge and expertise. They basically relied on auditors to do this closing of the books, which mars their independence, or at least I feel it mars their independence. And as a result, you end up waiting for your auditor to essentially close your books and before you can have any real sense of where your books are, where your fund balances are. That is why it took your audit so long for FY24's audit to be completed. Because not only were they auditing, they were actually closing your books and disaggregating all of these funds from this one big pile of, you know, junk in this one general fund in your books. And on top of that, there's not a lot of auditors, government auditors, firms anymore. So there's this, you know, maybe 5 or 6 firms throughout the state, and so they're all overwhelmed, and so you're relying on this one firm or this firm that you guys had that has, you know, 300 clients across the state and are actually across New England. So they're overwhelmed. They're trying to basically close all these towns' books, and they're all messed up, and so this is why it takes you so long. So what I ended up doing was I said, well, I'll come in, let me disaggregate all of these, let me set up all of your funds within your software, so that you can actually use your software appropriately. That took a while. That's why it took kind of 6 months. Usually it shouldn't take me very long to close your books, right? Once you have your software set up and once you've been maintaining your accounting records appropriately, closing your books really doesn't take very long at all. It takes whatever, maybe a week or 2, right? It shouldn't take you months and months to close your books. So what it really took me was what really took the time was really for me to figure out, okay, well, how do I set up these charts of accounts? How do I really really create new funds in your software, given how your system is already set up, and then how do I do all the adjustments that are necessary to set it up in your software. So now what's happened in your software, which is kind of transparent to you guys, is that you have you're now using your software, or the town is going to be using the software appropriately as a fund accounting software going forward. So that's in FY25's books. We're going to be rolling that forward into FY26 books so that it can be used more appropriately and more efficiently. Yes.
Mark, maybe you could explain what you'll be doing. So, and I guess the other thing in context, when you say cleaning up the books, it doesn't mean that we may have had a single fund for things, but I think what you're saying is this is a common practice in small towns. And there were no specific irregularities or anything that caused concern about funds missing or anything like that.
No, right, I mean, a lot of times people think when you say cleaning up the books, people think fraud. That's not really what I'm talking about. Cleaning up the books is putting it in order, right? I mean, accounting is organization of all of your transactions. That's really what accounting is, right? And these are journals, and they're journals just like a diary, right, is a journal. And so all I'm doing is taking a journal that was written in the accounting language and written poorly in the accounting language, right, with a lot of misspellings and a lot of grammatical errors. And I'm simply just going through the journal because I'm fluent in accounting language and saying, okay, well, that was misspelled and that didn't use the correct tense and that wasn't, that paragraph was all wrong. Let me rewrite this journal appropriately. I know what the intent was how this was supposed to be expressed. Let me express it appropriately. That's what cleaning up the books means, right? It's basically taking a known language and how you're supposed to express it, and simply expressing it in the correct language. That's all that cleaning up the books is. Now, it is possible that as I'm cleaning up the books, that I could find indications of fraud. I didn't find any indications of fraud. If I had found indications of fraud, I would have alerted somebody to it. But that's not that's not what cleaning up the books means. Also, just be aware that when you have an audit, that's also not what the audit is. That's not what a financial statement audit is. So just be aware that when you have an audit done, that's not what your auditor is looking for either. So when you have a clean audit, you know, basically a clean opinion, it doesn't mean that the town is free from, you know, your town is free from fraud, right? Your financial statements are free from fraud. Just means that the financial statements are fairly stated in all material respects. The auditor didn't happen to find any fraud, but that doesn't mean that no fraud exists, right? Their financial statement is not, a financial statement audit is not designed to look for fraud. The procedures are not designed to look for fraud. That's not the objective of financial statement audit. And I know that that's often a misconception about what an audit does, or it's you know, it's perhaps a secondary objective. It's not a secondary objective. It's not an objective at all. It's just, if it happens to be found, it will be found, it'll be reported. If it's not found, it doesn't mean that it doesn't exist. Yeah, so that's to answer your question. No, I didn't happen to find fraud. Doesn't mean it doesn't exist. By the very nature of fraud, it's supposed to be hidden, right? So if there may be fraud going on, I don't know, if somebody's really, really good about it, then there could be fraud going on, but I didn't see any indications of fraud. It's unlikely that fraud's going on. I wouldn't think that there's fraud going on because it's not really any place to really do much fraud. Well, I mean, really, when you think about it, fraud is really stealing and lying, right? That's pretty much it. And for lying, when we're talking about financial statement fraud, in order to do financial statement fraud, basically lie about your financial statements, well, you need to be sophisticated enough to lie about your financial statements. Well, you guys aren't gonna. It's not, right? It's a big part of junk, right, in the accounting record. I had to clean them up for you, right? So that's out the door right there. So the lying part is out, so it only comes down to stealing. So the stealing is really just cash, or really, guys aren't really that much cash based. Here, if it was cash based, it's gonna be centered at the town hall. Could it possibly happen? Yeah, it could possibly happen. That's gonna be, by the way, one focus of the next objective of the next 6 months of my what I'm gonna be working on. So there are some processes and controls that do need to be looked at and improved, mostly for efficiency's sake. You know, just the way that the town hall works. And just because of my experience, working with other towns and schools and counties around the state, I just have a lot of experience. So I'll be looking at what you guys do, or what the town office does, and offering suggestions on, okay, well, we could do this better, and here's a control that you could put in place that would be much more effective at controlling for this risk over here than what you're doing. So, yes.
First off, thank you very much, and thank you to the people who brought you into this. I'm really aware that Maine, as the newest town, is still making that transition from getting started as a new town to getting to the level where you're talking about. So here's my psychologist question. Are we like teenagers? Are we moving into young adulthood? What level with what you're able to do now with our county? Because going to the 7 separate categories for accounting really brings us to a new level. So where does that put our town in the timeline of being in good shape accounting wise?
No, you guys are, as far as comparatively with other small towns that I've worked with, you're no different than any other small town that hires me to come in and clean up their books.
Yeah.
And as I've told other towns when they hire me, the bulk of the bulk of the work is at the front end of the engagement, right? Because that's where I have to do most of the work. Once the books are cleaned up, managing the books afterwards is fairly simple. Because small towns are not complex entities, right? I mean, they're pretty much cash entities, so. You have property taxes and you have excise taxes coming in and you have motor vehicle and, you have very little, transactions. It's not like you have these complicated transactions coming in the door. And then your transactions going out the door are essentially simple invoices. So it's essentially a cash in, cash out business. So accounting for the transactions are not very difficult once you have the accounting records, once you have the accounting records and accounting systems set up appropriately and you have the processes and controls in place set up well. One thing that is unique about Schwieg Island is that you do have a lot more grants than a lot of towns your size. So grant accounting and reporting and managing is something that we're gonna have to work and have processes and controls for. But once we set that up, that's not anything that is particularly difficult. But as far as comparatively, you're not a child or a teenager, you're young adult, just like anybody, just like any other mid-sized or small town. It really just comes down to, you get what you pay for. In terms of taxes, and it's not uncommon for towns, right? I mean, people don't want to raise their taxes or they don't want to pay a lot for what they get. I mean, what they have for municipal services because they don't want their taxes to go up. But then they're like, well, I don't know why why we don't have the best accounting service in the world. Huh? You got this, whatever, $12 million organization here and you're paying somebody that doesn't have an accounting degree to be your CFO. I don't know, beats me why you guys have that, not the best accounting system in the world, but that's not how I would do it, but that's what happens with towns and municipalities. This is why, by the way, Washington County, if you have watched or read the news, is literally going bankrupt because they don't want to, they didn't have a professional accountant managing their books, but that is the nature of government finances. And so in order to mitigate that risk, which is a huge risk, you have to do something different, which is why my services are in demand.
When you earlier referred to the software we're using, we referred to Trio.
Yeah. Somebody else was that you that had a question? Yes.
I have a question, it may not be that easy to answer, but speaking about other small towns, is it? I have a feeling that on Chemung, there's quite a variance in income there with all its own. Is that true in other towns? Are we an exception there in terms of
Income among the tax base?
I'm talking about, well, it's not really income differences, but I have a feeling on Chemung, there's people up here that have a lot of money, or people who don't have as much. I wonder if we're typical in that regard.
Not necessarily with a community that has seasonal residents. So a lot of towns that have seasonal residents will have that kind of makeup, right? They'll have residents that own properties that they don't live there, and they have a huge differential between the residents that are permanent residents and the residents or the property owners who are not permanent residents or not permanent year residents. But I mean, I don't know the actual demographics.
That's probably not something you deal directly with.
No. Yes.
Just for the sake of people like myself, and not particularly, we're not accountants, for sure. As you rework the chart accounts, add some, modify some, whatever, you haven't had to rebalance the dollars associated with those accounts. Correct, that, and one, I think some figures, and things weren't matching up. But during this transition time, there's gonna be some figures that will be different than they were before because they've been reallocated to different accounts and or funds, correct?
Yeah, so, so. For example, the general funds fund balance from FY '24 had to be restated minorly. From what the audited financial statement said, in talking with Aaron, he and I are gonna be getting together next week. Because he has some information about FY '24's stuff that he wants to share with me, because he thinks that that also needs to be adjusted. When I disaggregated the reserve funds, I didn't restate any of the reserve funds. I don't believe I restated any of the reserve funds fund balances based off of what I had, based off of. If I remember correctly, I didn't restate any of the reserve funds ending fund balances from FY '24. Ending balances, what was in the financial statements. I simply pulled them out and separated them out of the general fund. And so now, any differential between what was in the FY '24's general fund, well, actually, if you were only looking at the financial statements, the audited financial statements, they were already in the audited financial statements, they were already separated, right? Because that's how they were supposed to be reported. So you shouldn't see any significant difference. And I can't remember off the top of my head if I did restate any of the reserves. There might have been one or two. If I did.
School transportation and public works, public works reserve, those two reserve accounts. Cause
They
we were,
restated. They weren't restated, they were negative.
or so I guess maybe that's something to touch base on. The town has historically focused on reserve accounts with what was in the bank versus.
Yeah,
what
okay,
was-
so, right, so that's an example of where the accounting, because of the way it was done prior. So, there's a difference between cash and fund balance, right? A cash balance and a fund balance, right? The fund balance is really what's available or what is left in the fund after all, resources have been come in and gone out of the fund. And the cash, doesn't necessarily represent that, because it is possible for a fund to have had an expenditure that it didn't actually make in cash, right? For example, the Public Works Reserve had to have, in the past, at some point, made an expenditure that the operating checking account paid for, and somebody forgot to reimburse the operating checking account by actually transferring that cash. And then in your town meeting, what was recorded as the Public Works Reserve balance, fund balance, was actually its cash balance. And so going into FY '24's, looking at FY '24's financial statements, the financial statements actually reported the fund balance correctly. The fund balance was reported correctly as negative balance, which is where I got it. But when I looked at the town meeting warrant articles, the town meeting warrant articles reported them as having positive balances. And actually, that's the same thing with the school reserve. Aaron had said, well, no, that one had a positive balance, and no, it didn't. And it didn't because of the same problem. It's most likely because it had never reimbursed what had been expended out of it in the past. So those aren't actual restatements because they had been properly accounted for in the external financial statements. It's just that in the town meeting warrant articles, which is where most people probably saw what the balances were, they look different because they were looking at cash balances. So that's another example of getting proper accounting. Yes.
So the changes that you've made and splitting things up and putting in the proper areas that they need to be in,
Yes.
how? I mean, those things were mistakes that were probably human error also, so it
Yes.
didn't get, taken from one place and put back in where it needs to be. And so is the new system designed to avoid that human error?
Yeah, I mean, that's the entire point of fund accounting. So when you, even if you were to forget to do a transfer, when you have fund accounting software, there's a due to, due from account, that it's basically an interfund liability and receivable. So you have to think of funds as basically two separate, separate economic entities, right? The general fund is its own business and the school fund is its own business. And so just like a conglomerate, right, NBC Universal owns, NBC News and also owns Universal Studios, right? Well, it's possible that those two companies can do business with each other. And when they do business with each other, they could actually owe, one company could owe the other company money. And if that happened, Universal Studios would have a receivable on its books that NBC News would have a payable on its books. Well, it's no different in concept with a fund, right? So the general fund could have a due from, which would be a receivable, that the school fund would have a due to, which would be a payable. So even if the cash doesn't transfer because somebody forgets to do it, it's represented as a payable and a receivable. And the fund balance represents whatever the fund balance is, regardless of whether that cash flows in or out. So yes, it's accounted for automatically. Whereas when it's all within the general fund, within one fund, you can't see it because there's no due to, due froms. Right? Yes.
So the result of the final report, budget actually, now,
Yeah.
it looks like the final on revenue is that there was a positive variance of 243.
Yeah.
And the
yeah.
expense, there was a positive
Yeah.
variance of 100, so a total of 343.
Yeah.
And is that then, how does that relate to the undesignated fund balance?
So all of that closes to the undesignated fund balance. So any surplus of revenue beyond what you had anticipated increases the fund balance, and any money.
Decrease in expense.
Yeah, any decrease or any money that you come in under budget also increases fund balance, the unassigned fund balance. Yeah, so your unassigned fund balance increased by whatever it is.
43.
Yeah, whatever it says on the.
Thank you.
Yeah.
Any last minute burning questions before we turn it over to the finance committee, so then we can give them enough time to be able to present?
Marco, you're around. Yeah, we'll be in and out, so if you have more questions, you can direct me to leave there. Thank you.
Thank you.
One thing that Mark said that we in our presentation, we have a chart of grants, and there's a lot of grants there. So he said that this island has a lot more grants than a lot of communities works with, that's good news.
And a lot of these grants have very specific reporting that we're required to do, so this work is gonna assist us in. So we have $1 million in a grant that we're gonna receive for Stone Wharf. We have over $1 million of funds that we've received for all the FEMA damages. All of that is gonna be separated into different areas, so then it helps us keep track of it better and report it out better. And ultimately, when the board needs the reports, it's not all gonna be clumped in one area, making it very difficult to explain and to provide information.
So those two big grants that Vika talked about, she was a large piece of getting the $1 something from FEMA. And played a big role in getting the congressionally designated funding grant
The
from
select board gets a lot of credit for that.
Representative Pingree, but that $2 million, if you had to bond that, would cost $140,000 a year, which would be over a 4% tax increase, so.
Don't peek it up.
Okay, I'm John Rent, member of the finance committee. Chip Emery is a member of the finance committee. Ben Bagula, who's a relatively new resident. Jay Corson, and I think Jim Hartling is probably,
Listening, yeah, he's.
listening in. If you're on Zoom or, YouTube, you can't see the slides, I don't believe. So you can find them on the town website, on the calendar, under today's date. If you click on the documents, the slides are there. And so everybody here also didn't get a copy tonight, so you can find that information there.
Purpose of the.
There. So we began in 2025 and really got started too late to make much of an impact on last year's budget. So the budget we're under now is fiscal year 26. We're starting to work on fiscal year 27. I introduced the members of the committee, with there are also ex officio members. Carol White from the select board, Vika, town administrator, and Aaron Townsend, our school superintendent. Special thanks to Mark Dyer and Herb Mann. Those guys have participated in attended our committee meetings, so we've had a lot of committee meetings. They worked with Vika to develop a funding plan for road repair over the next few years. And they provide a lot of insight as to how we work to make what we're doing standard, continuously improved processes. Okay, so tonight's purpose is to describe capital budgeting, and we're primarily going to talk about bonding and bond capacity and funds, dollars put into the reserve funds. So I'd like to start by saying, I'm gonna tell you what we're gonna tell you. Tell you that we think we can afford $10 million in new bonds over the next 5 years. And we think we need to target to put $1.2 million every year into capital, either bond payments or reserve accounts. Right, and we'll look at that as we go through the presentation. So Aaron's not here tonight, but basically he has stayed in touch with what we've been doing. He is using the same process that is being implemented in the town to collect information about existing assets and begin to calculate what kind of reserve funds need to be put with those assets. Okay, so we have done a comprehensive review of the bond debt, and you're gonna see that in graphs. And you're also gonna see that in chart as we move forward. We started last spring with an asset list that was done. It was part of an audit report or part of an insurance report that showed all the town assets. And that was a fiscal year 23 audit. And here's all the assets. And those got put into a spreadsheet and got lined up with reserve accounts. And then we worked with the departments and committees to understand, do you have these assets? When do they need to be replaced? If you're gonna replace it today, what it would cost? And we began to use that information to come back to the select board and say, here's the money you need to set aside in the reserve accounts. So this year, that process that I just described has been formalized, but additionally, Vika has asked the departments and the committees to complete capital expenditure requests for any capital asset that they plan to by between now and the end of fiscal year 27. So that kind of double checks that here's the master plan. Oh, and here's what we really need to do in the next 18 months. The finance committee is using a technology called Basecamp. It's an interactive program or a program that we can, if I post something there, the other 4 committee members see it. And so we're collecting all the data we collect, all the emails, all the decisions we make in a, what's the right word for it?
It's an online workshop, and some of you are familiar with it, we've used it, and I've used it for a number of years for the business that I manage, and one of the big things, the 2 big things about it is that I've noticed, and in working, we're big on process, and the process, to define the process, this budget process, and then to capture it and to save it. We have people in the room who have a great deal of institutional knowledge about the town. And that probably is captured in 10 or 12,000 emails, which can never be reused again. So this is something I would encourage anybody that does this kind of work. You capture it, you keep it for people to use. The other thing that happens is when somebody slides into the seat, they see all those. These emails are all done by topic. They're all structured that way. So that was, and John was good
The
about.
words I was looking for were collaborative software, and it's really helped us work efficiently. And Chip brought that to the group.
So
And Chip is also the producer and director of all these fancy slides. If I had done it, there'd be 4 or 5 black lines per page.
Good question. Sure.
You,
Did I
you,
understand to say that this town gets something like 12,000 emails?
no, it was a figure of speech to say that the way people communicate now is posting email.
I was
And-
pretty impressed.
Probably not.
You wouldn't, I mean, easily, yeah. We've got 600 emails in here from a year's worth of work, and we're not doing any with it.
okay, another piece that it's been important to us, and Carol and Vika put together a list of all the high-level projects and a detailed summary of where we stand on all those projects and what we have for cost estimates and what we have for grants and what we have in reserve accounts. We know that. So, and we'll see some charts of that here in a minute.
The charts that you'll see are based on Vika's work. We wanted to make sure to tie in that she was the source of information. The same thing as the next slide you'll see. But that's where we get our information from the town. This was we call it the big colorful spreadsheet, and that's what the information that the town was given to work with, that they were not connected. And so we connected them to linking the assets to the reserve account. The question is, you own something, when do you need to replace it, and how much will that cost? So that these spreadsheets factor in that the cost, the earning of the reserve account, which earns some, and what you're going to look at in inflation. And it says in this year, you're gonna need to put away $10,000 a year for the next 12 years to buy the new truck or something. That's what the reserves.
So that's what we did last spring. We worked with a spreadsheet. This year, that information is going to the town accountant, Andrew, and he has a program it's not a relational database, but it's a database of all the assets. And we're just starting to work with it, but from the departments, he knows what the replacement dates are and what the replacement cost is. Currently, it's got the present value required per reserve account. So this says that for all the reserve accounts, if we wanted to buy everything, that the departments have said we need, when they need it, we would have to have $3.6 million in the bank right now to buy all that. And we don't have 3.6 million set aside for those assets. But there's a lot of variability in this, because in that 3.6, there are 4 fire trucks that are $2 million. So you subtract that, and the number changes substantially. So it just highlights the importance of deciding what you might bond and what you might reserve funds for.
And these numbers here, no, and Andrew is still working on updating this, and to update, it requires going to the department and said, when do you really need that truck? And so there's a lot of work that he has to do. So the numbers, forget these numbers, because they don't include all the assets. There's well over 100 assets. And it would, if he had them all in there right now, it would be more than that.
Right, but I think February 7th, there is a actual select board budget meeting to talk about capital. And hopefully by then, we'll have some very refined numbers as to what dollars need to go into reserve accounts.
And I should say also, all these numbers here is everyone's best effort to come up with something. As you'll see, everything's gonna change. So all these numbers aren't right, but they aren't wrong. And it's the best that it's the best that we have. Some of the unique challenges for us as an island.
Go ahead, Joe.
Well, we're the ones that wanted to live on an island, right? But it's a smaller tax base. So when we buy a fire truck, it's a bigger burden to the taxpayer than it is for Yarmouth. There is, wrong button. We're surrounded by water. So we have transportation coming and going, and that's growing a lot. We have to bring stuff on the island and off the island. Climate doesn't affect a lot of towns where the storms are causing all the damage that they have. And the sea level rise, 2 wharves have to be updated, for, largely a large amount of the cost will be because of that, so.
So when we look at the details for the highest priority projects that need to be funded and potentially mostly paid for with bonds, they're all related to transportation back and forth or storm damage. Okay, the municipal budget pays for everything. In our work, we've separated the municipal budget into 4 segments. There's the school piece, there's the municipal operating budget, there's reserve accounts, and there are bond payments. And we've been focused on the reserve accounts and the bond payments, the capital piece.
The school takes care of itself, and Mika works closely with the board of selectmen to be our everyday expenses, operating expenses.
So the school has some, they have capital reserves too, and we haven't looked at that. But again, Aaron is trying to line their budgeting process up with the way we're going through it, the municipal side. So I think we already covered this. The capital budget separated from the operating budget. We're saying it's the reserve account money and it's the bonding, bond debt that we secure. And then, go ahead.
From those numbers, you develop a priority of what, of when you can do it.
We talked about it, 2 ways to pay for capital items, bond debt, larger items, and reserve accounts for smaller items or items that you have a long time to save for. There's some good examples of things that have happened here in the town. Tons of work have been done on the roads since 2007, millions of dollars. And there was no bonding required for those roads, because a plan was laid out and the money was put aside to meet that plan.
So you can either bond it, borrow the money, usually for something big or long, that's gonna, like school renovation. Gonna go on for a long year, so you spread it out, or you use capital reserves. John's gonna talk more about what are the capital reserve accounts?
We have a lot of capital reserve accounts and, every year at town meeting, if additions are made to those accounts, you see in the warrant what the recommended reserve account addition is, and we vote on it to put that money in the reserve account.
Summer reserves are not just for buying something, but repairing it or maintaining it. That can come out of that too. Not always, but
Keep going. So reserve accounts and long-term planning, reserve accounts help us reduce debt. They also help us stabilize taxes. We're trying to avoid big spikes in taxes. If we didn't put the money away for the reserve accounts, you could end up some year needing a huge tax increase. The other thing reserve accounts have done, and a good example, and we'll see it in detail on another slide, is for this, we put money in reserve accounts like for the Stone Pier. There's over $900,000 in that reserve account. So that will not only reduce how much we need to bond, but it was there that showed good faith in the community that this was a priority project. And it probably was a piece of the decision-making that went into securing the congressionally designated grant from Representative Pingree. We're serious about it, we're saving for it. We have 900,000 put away.
John, one other point to add in on this is when you've got like the Stone here, you've got almost $1 million. That allows us to manage the cash flow on the repairs and the rebuilding that we have to do. So it allows us to work around when we actually have to sell the bonds and raise the funds. So we've got roughly $2 million in grant. And that allows us to smooth that process out and they can choose when we need to raise the bond money and when we can wait. And that's money that's currently earning 3%, by the way, as opposed to issuing bonds and paying 4 or 5.
John, as we get grant money, is there any expiration date on?
There's all kinds of restrictions on all the grants, and we're not gonna go there now, but we can come back to that. Mark talked about this, we have typically looked at the money associated with reserve accounts by what's in the bank, and what's in the bank doesn't 100% agree with what is in the fund balance. But here there's the Stone Pier, and at the end of November, there was 902,000, and that was set aside in support of a large project at the Stone Pier. Fire department, there's 214,000. And the fire department right now needs new air tanks. They need a compressor to fill those new air tanks. And one other big thing we're forgetting, and potentially a stretcher that, because we swapped stretchers with Yarmouth. And those things total over $100,000. So that's where that money would come from for that. And if we're gonna try to save for a fire truck, it would also be in that line.
and that's what you vote on in the warrant every year at the town meeting. It says you want to put so much money in this reserve account, which is like a savings account for that family.
The voters vote for each reserve account, so creation of reserve accounts, the definition and how the select board can expend them is all voted by the voters, so it's not a decision that by select board. So those accounts are restricted on how they could be used because of the choices that the taxpayers made.
So this is the municipal budget, this is the whole thing.
Yeah, and this is actually 4 years of history, so forget that 3% inflation. It is what it is here. But we can start by, here's the school budget, which we haven't paid a lot of attention to, but it's actually gone down over the last 4 years. Here's the municipal operating budget. It's gone from 1.68 million to 2 million. Here's the capital reserve funds, and you can see that for the last 2 years, a lot of money has gone into the capital reserve. A big piece of that 772 in this fiscal year was 300,000 for the Stone Pier Reserve. And then here's bonding, and we're gonna look at some bonding. We're gonna look at 26 total bonds, what makes up these bond numbers and where they might go over time. Okay, so based on the overview of the big projects that the town put together, Vika and Carol, why don't you fill the whole thing out, Joe? No, Harlan, I'll speak through the pieces as we go.
Right. Just let them know when you do.
Yeah.
That's just. Don't.
So these are the projects and we put them in the priority list that the finance committee understood. So Stone Piers, one, widening of Wharf Road, it's a companion project.
And we've used the high estimate, because people throw out numbers. These have been done best faith of the initial design, but none of them have been final design or bid by a contractor.
Right.
So we're just saying, use the high number, because when somebody gives you two numbers, this is a high or low one, what do you remember? The low one. So we're just trying to be.
So we use the 7 million, 915 in the reserve. I guess Chip had an end of December number there. We looked at one a little different before. And there's the grant money we have. So potentially, right now, if the project came in at 7 million, we need to bond $5 million.
And that would be a 10% tax increase based on the numbers at the bottom, the rule of thumb for $1 million bond. These are.
Why don't you fill out the whole chart and I can speak through it more quickly.
Does anyone have questions about what East Shore is, or Venice, or the fireboat, or any of these items?
I'm gonna speak to that.
Hang on. Everything's good.
Okay, Jake, let you go.
You got,
Yes, you're right.
I had a feeling that the wave rate Stone Pier in really bad shape, and I wondered if when it comes time to repair or replace it, if they will take that from some sort of contingency fund, or will that have to be a separate deal?
I don't know. I haven't heard any talk about removing, repairing, or replacing the wave break.
Well, I don't think you'll have to remove it, I think it's in the process of removing itself.
Carol will speak to
I
that.
know that it's an inadequate piece of equipment, and I would like to just suggest at this time that the town or dump any more money into that wave amplifier, that they actually explore something that actually works, and it would cost a lot less than repairing or replacing that. But I'm curious, would it come out of the contingency fund for the Stone Pier, or is that something we'd have to separately have for in the budget?
It could come out of a reserve fund. There might be a reserve fund that would have a definition that would fit that a little bit. Like there's a town infrastructure plan, but it probably doesn't fit there. That's more of the buildings like, Carol?
I mean, if anybody don't, what I'm saying, I can talk to you now, you can tell them how many ones are, I don't know.
I think that it's well known that the rate break's in bad shape, and so it isn't currently in the project estimates. But I think it will be considered as part of the whole float and, you know, kind of non-pier infrastructure. The piers, you know, the floats that are there now, so I think it could be included in the total project, but we haven't really come up with a cost for a plan, and I think we'd be interested in what your thoughts are on that. I think it would be a sort of Coastal Waters and the engineering firm that we have would be working on that part of it.
What I was more concerned about was whether how it's funded. And whether or not we would continue to fund something that doesn't work.
Well, I think listening to what you're saying, we shouldn't replace it. And so I'm hearing that, and we'll look at the other alternatives, and we will have further conversations with you, Bernie, on that.
That,
Can you get down to the total? Okay, so based on the input that we received from the town, we listed the projects in what might be the priority order. Stone Pier, Wharf Road, South Shore Drive, East Shore Drive, and Bennett's. These two are, have FEMA funds associated with them, there's storm damage. Bennett's has some FEMA funds, but it's mostly a barging project. Okay, after that, fire boats, a fairly relatively new project. Public safety building is the project that's started out as the facilities committee that was fire department and town office. At one time, there was a $5 or $6 million estimate. The current estimate's $2 million. The next fire truck we need is a new tank truck, $500,000. And then this $2 million number for Stone Cousins Island Wharf, I think we might have just made that up. I don't know that we ever heard a number for.
Yeah.
I don't,
We haven't had.
We don't know.
we don't have enough, but we have no idea. But those projects potentially add up to 15.2 million. Now, if you take the grant money and the reserve accounts and the FEMA money out of there, that's 11.6. We're saying we're comfortable. That's a relative word, with perhaps 10 million in new debt. So if you just look at these top 5 projects, 5 million, 1.8 million, you know, you're over $7 million there, and we don't have bids. And we all know what happens when you get bids. They tend to sneak up. So our recommendation is that we proceed with these 5 projects and continue to develop good numbers for the public safety building and Cousins Island Wharf. And I don't think anybody would be in a position today to say, what's the priority, public safety building versus Cousins Island Wharf? We don't know what kind of an engineering report we're gonna get on Cousins Island Wharf.
Yeah, we didn't wanna not put in something for Cousins Island Wharf, so it is a guess, but we didn't feel it was responsible to just say nothing. But this is the graph that choked the computer. Just to you're aware that there's some bonds that are expiring. And that's what you'll see here. So there's Cumberland bond is expiring. Cumberland School bond is small, but it's expiring quickly. The school renovation will carry on. This is the next 5 years looking at, that'll carry through. Broadband again is another one. Dredging is coming to an end. So Stone Pier again. Well, it's, you know, it's
And we phased the money in there, we don't know the timing, and we don't know when you do a $2 million bond or increment, 3 increments of 2 million or whatever, but it was our best guess.
And this also shows the ability to perhaps mitigate it by the way you do the order with which you do things, so you can decide when things start. We may not have a choice because they still have to be designed and permitted with the DEP and, but anyway, it was to, Bennett's Cove, working on that, East Shore Drive. Will be some things. Public safety, put that in there, maybe later on, the tank truck may be pushing that a little forward, and Cousins is the last one.
What, because
Yes, so that would be the total annual cost if we did everything. And we're saying that we think we need to get down the road quite a bit on bids and permitting for the Stone Pier and Wharf Road and the other three, South Shore Drive, East Shore Drive, and Bennett's, before we would move forward with those.
So likely a lot of these will slip forward. If you look at the in 2030 and 2031, even with these, if they were funded and done in that time frame, you can see that 2030 and 2031 runs out. That's where these.
John, would you permit a couple of questions about bonding?
Quick ones.
I think you guys have said for every $1 million that we're proposing to borrow, it's about a $70,000 annual payment for 2020.
Yeah, it's 25 years at 5%, so hopefully it's a little less than that.
Okay, and how is your bond rating determined? Is it determined by the bond bank based on how much debt you already have incurred? How much you carry?
So if we can, I said we'd do this presentation in 30 minutes.
Okay.
So let's get through the presentation and then come back to those questions.
No, thank you.
Okay.
just one quick thing I'd like to add in here, what makes this feasible is the fact that at fiscal year 28, we will have cut our debt service in more than half. In other words, currently, we're paying $450,000 to $60,000 a year in debt service. But by 28, it's fiscal year, more than half of that debt comes off, will be paid off. So that opens up the ability to create more debt service payments.
That's when I can have a whiskey with you.
I just wanted to make the point that you had broadband bond money in there, but the reality is that is being paid for through subscriber fees and Axiom. Right. So it's, yes, it's an obligation that we as a town have, but not one that we're, need to be paying because Axiom is paying that. Correct. Just.
Well, we do have to pay it, but we talked about that, so you're right, if you really look at the whole balance sheet, you can see where it comes out eventually.
If our numbers are within 80,000 total, we'll be wonderful.
Yeah, they aren't.
All right, as I said, we're relatively comfortable with 10 million in new debt. Here are the projects that the finance committee is comfortable saying we should proceed with. And we needed better costs on these projects. And so there's probably some discussion about, we need the funding to support the engineering for those projects, and maybe that's already in place. I don't know, but that should be part of the fiscal year 27 discussion.
We will go through this one fast. This is basically the whole 9 yards. And so this is the annual operating budget plus the school expense, plus all the stuff you just saw on the previous slide. But we wanted to, because you'll see why, the graph, this is down at the bottom.
So this data supports this graph.
The data supports graph, and if we had just done, the bonding is up on the top part of this chart. And we had to break that out so you could see individually, it would have better graphic representation.
Do you have one that shows the percentage increases?
I do.
Yeah. So I looked at that, and if you totaled up the percentage increases over those 5 years, if you said, what would be the single number that would add up to that total? And it's like 5%. So that you could say that would be a fairly substantial tax increase. Now, this has everything, all the capital spending in it. All right, we're not recommending we do that yet. And the other big variable that's in here is the capital reserve spending. 772 is what we have in this year's budget. And that's where we got the target ought to be 1.2 million, which is the total of current debt plus the 772. We then inflated that reserve number by 3% to get up to here. We don't really have a good handle on what we need for a reserve number, and that's what we're working on.
We should,
And so the message is, we put as much into reserves every year as we can, which I think the town's been doing for years. But it would be nice if we could target the 1.2 million in total as we work this equation. Here's the change in taxes, our taxes versus the consumer price index over the last 9 years. And I was in a meeting with Herb Bain the other day, and he said, well, what CPI should we use? There's 40 of them. It wasn't related to this, it was a different project, and I don't know what CPI we used here. Jim Hartling used it, so the message on the last slide was our taxes have gone up less than inflation, okay?
8% listen.
Maine State Revenue Service publishes statistics on taxes. I don't know how accurate they are, but they run about 2 years behind, and they publish the full value tax rate for every town in the state of Maine. Okay, and the tax rate's your millage. Okay, so I went back to their last numbers that they had, which were 2023, and got the millage for Cumberland, Yarmouth, and Shebig, and applied that millage to 500,000. And that's what the tax calculation would have been. And so that's the state's estimate of full value, everybody's at 100%. Now, the one problem I have with this is I did this and then I said, there's no way that somebody that had a $500,000 house in 2023, $500,000 assessment in 2023 on Shebig, paid $3,700 in taxes, and they did. So it's comparative. Our taxes haven't gone up anywhere near as much as some of the mainland communities. And if you look at that chart and you just look at the villages, Shebig has next to the lowest tax rate in 2023 of any town in Cumberland County, except I think it's one, it might be two. Long Island and Harpswell have very low tax rates. We talked about grants. We have a lot of grants, a lot of good work has been done on grants, but they're an important piece of keeping track of them as we go forward to understand the impact on these big projects.
I think it's also too, that there are other grants out there, I'm sure that we don't know about, people work hard to find them. But this is, we're trying to, the next few slides are ways that you can offset some of these taxes and the reality of them.
Okay, Jay, you have a couple of comments on revaluation?
We should start out and understand. The state of Maine requires that you undertake a revaluation once the difference between full value, it's 100% of the value of the activity, and assessed value gets beyond a certain range. And I think that range is between, is a 40% difference. And we are there. Now, keep in mind that when we say we're gonna have a revaluation, it does a couple of things. One, it reintroduces fairness into the taxes. Everybody is taxed on the same basis. Everybody's house is looked at through the same set of lenses. And, the value is established that way, as opposed to, after you go over a few years, that people are all over the map. So it's a fairness and equity issue. It's also a state law. And in addition to that, it's not gonna happen for a couple of years. I know I've heard people talking about it on the boat. I've heard, people. We haven't hired somebody to do it. You're talking about a process that's big, at least 2 years away, maybe 3.
It will take about 2 years for them to do, once we find somebody. We do have it out right now to be looking for one, so we have a request out for qualifications. We are not having exactly a line of them lining up at our doors, so that is a challenge, that, contributes to extending the process.
Thank you. So it's in the future, but not the way distant future. Next item, support all eligible taxpayers. The state runs a series of tax relief programs, things like the Homestead Act, and other ones that there are people on the island that qualify for that haven't taken advantage of. And it's something that we need to get more information out to people so that they can make sure that they start to take advantage of some of the state programs. Most of the tax relief programs come through the state or through a filter, basically the state. The third side of all this is, I think it's the next slide, it's talking about circuit breakers.
Yeah, but Ben is gonna speak to that.
We have,
Okay.
our newest member is now a tax relief expert.
No,
Yeah, so you might remember I said one of our charts over the next 5 years, the average tax increase, if you just went by that graph, would be 5%. That might be significantly over inflation. So the select board asked the finance committee to investigate local tax relief programs. And Ben did a lot of research on that, and he's gonna tell you about it.
Right, I think I've met most of you, I haven't, my name is Ben Figueroa, I started working with the finance committee, solely for this project. And they asked me to stay on
You liked it so much you wanted to join.
and. You guys are just too nice.
Yeah.
So before I start, Jay mentioned that not a lot of people are taking advantage of some of the tax relief programs that we have in Maine. I have brought some information and it's over on Vika's table about most of the current tax relief programs that you guys can get on. And so a couple things that I just want to talk about, these are not gonna take too long to get through. Don't worry if there's a lot of text on the slides. That's just if you'd like to read through it later or some more information about. Yep, there we go. So right now we have 9 or 10 programs for tax relief in Maine, and residents on the island only use 2 at the moment. We're only using homestead and veteran exemptions. And there's 2 problems with this. One is that's the programs we have available to us. And 2 is that even the veterans program, we should be expecting 30 to 35 people using a veteran exemption, and we only have 11 using one. So there's an issue with kind of awareness of programs in general, and the specific programs that are being offered, because we, as I'm aware, some residents have approached the select board members and asked specifically about programs like the circuit breaker program, which Maine now has their has kind of circuit breaker program. They call it their property tax fairness credit program. Just if you don't know what a circuit breaker is, they're designed for low income or senior residents or people on fixed income or closer to the poverty line. that can't afford property tax payments, and if you can't afford your property tax payments, eventually you'll end up losing your house. And if we can avoid that here, I think it's worth looking at another program for it. There are 4 requirements if we're gonna have a municipal program. You have to have a homestead, has to benefit owners and renters. It has to provide proportional benefits, which everybody here, I believe, is taxed at the same millage for their property tax. And then, if we have an age restriction, we have to set it no lower than 62 years old. Most towns seem to have an age restriction and keep it as a senior program, but it's not a requirement, which will come up at the end. And we can also create our own eligibility standards and requirements for who qualifies for the program. So to implement it, it's through local ordinance. It would be its own separate line item in the municipal budget. If we have more money than people take as credit, then we can roll those into a reserve fund. If we have too many people and they would go over budget, we would reduce the credit awarded to everybody by a proportional amount. And then again, we can create our own requirements for who want to qualify for this program. And this is, I think, what most people are gonna be asking is how much money is it gonna cost you as a tax increase? It's an extra $6 per $100,000 in your property value. That includes your land and your buildings. If you have, and that's per lot. So if you own 2 lots of land, you will pay twice, depending on the value. But overall, the median increase will be about $25 to $26 to pay for a $20,000 budget for this program.
A year. Yeah, a year, $25 a year.
Yes.
Now, that's if we funded it at $20,000.
Yes, yeah. If we chose to fund $20,000, we'd be paying, the median property owner would be paying an extra $25 for their lot at that time. And so kind of looking at alternatives and seeing what other objectives and what other goals that the town has been looking at that we could try to work this into and work with. I mentioned the age restriction is not a requirement. So if we wanted to target multiple groups, for example, I talked with a lot of people and heard a lot about moving younger families to Chevy. We could do that. There are other groups of people that we could target with this if we would like to bring them in, or like to benefit families or students or younger people. We could certainly do that, and it fits within the existing town goal that we have. On top of being a residence, a senior resident program.
And there's, I mean, Ben did a lot of work on this, so that if you have any questions, you can contact him directly to get more information on.
And copies of those tax exemptions, those property tax exemptions will be available, or I believe will be available at the town office and eventually on the website with a couple of updates to be.
Thank you, Ben.
I just want to say one thing. I've been through revaluations in a couple of towns over the years, and they can scare you to death. But don't be, because what the rule of thumb is that we've seen over the years is that a revaluation, 1/3 of the households will see their increase in their property taxes. Another third will see no change between what they were paying before, and the last third will actually see their taxes go down as a result of revaluation. So revaluation in itself does not mean necessarily that your taxes are gonna go up. So take care.
Yeah, and as a extra point, just because your valuation does not mean your taxes.
Exactly.
Right, the budget stays the same, it's just gonna be, it's gonna be divided differently.
Yeah.
You're next. Wrap it up.
I'd like to see the full slide, please.
I'll teach you something about that in this later.
I think we talked about all this.
Yeah.
Okay, we're focused on reserve accounts and bond capacity and making recommendations to the select board as part of this budgeting process. We think a new debt target of 10 million is reasonable. We think annual capital spending target ought to be $1.2 million plus inflation. Now, I'm not sure how doable that should be, so maybe it's a stretch, will be. So perhaps that's a stretch target. Proceed with these 5 priority projects. Get them permitted, bid and financed, and then work on these other 2 large projects. Okay. You guys can read as well as I can. I think that's it. We had good turnout. I appreciate everybody's interest. I think you. But any questions, comments, concerns?
I have this one on some of the tax benefits. You have to sign up every year, because I know I signed up once for something and I can't remember what now. But do you have to keep doing that?
Homestead exemption you have to sign up for once and it should continue to be there.
I think that's what we signed for,
Once and done.
once and done.
But if you don't have it, I think there's a date you have to sign up.
Yeah.
It's like April sometime.
Yeah,
perhaps.
it's in Ben's paperwork.
I think that depending on which one it is, they have different criteria. My mom gets the veterans and it's like every other year we have to go to papers. So I think it really depends on what the exemption is.
Allison?
On the custom violence project, does Yarmouth pay part of it?
There's a reserve account that isn't on our list that's maintained, that's a by Yarmouth that we contribute to every year.
Okay.
Is that a fixed 40,000?
The Yarmouth work, Yarmouth and Shebig have an agreement where Shebig pays 80% and Yarmouth pays 20%. So Yarmouth holds a reserve account that has about $480,000 in it that annually through the budget process, through the warrant process, Shebig contributes. It's right now, it's about $25,000 a year that we send them a check that builds it. That's for the wharf. The parking lot is not part of that agreement. That is on Shebig.
Other questions? Jay?
Could you take a second and determine why we voted on it also?
The fire boat, it's basically a rescue boat. It's not gonna have firefighting capability. And the fire department made a presentation to the select board. I think it was the first meeting in December. So if you went back to the town calendar and clicked on that, you could see the whole presentation. Was Jane?
And I will add, as a town with 17 islands, we need access to those islands. We also have mutual aid with Long Island. At this time, the Sheboygan Boatyard has allowed the use of their boat when it's in the water for public safety. So a big shout out to the generosity of the Sheboygan Boatyard. However, there are times when, like right now, if we need mutual aid with the town of Long Island, they would need to come and get us. So I think that increasingly we can see the need for that. And there have been several times in this past year where the safety of people in Casco Bay we haven't been able to meet the need as a town and relied on other sources, but especially the Sheboygan Boatyard. So I think it's a big expense that is good for our town to look at, to be a responsible town for our citizens and safety. That was a lot.
I promise I'll do it very quick. But right now, it's not my understanding that this proposed vote is going to replace the rescue call transportation.
No. CTC, the CTC connection stays the same.
It can't change.
Yeah, it would be to get somebody out of the water, or it would be to take firefighters to Long Island to aid them or into the main.
Or Hope
Island.
Or any of the other 16 islands. So, thank you very much.
It happens a lot more than people are aware. That I'm hanging on to the boatyard boat for dear life as we're screaming across the water to get somewhere. Yeah.
Okay.
Thank you.
Hey, lady, go, what is the mechanism for, contributing to, some of the contingency plans for the, infrastructure? Is it to go through this committee or to go through the town, the town administrator, or the various different committees that are set up? What's the mechanism?
Are you speaking about the wave attenuation in Pacific?
Making an effort to contribute to the information on it. On some of these various different infrastructure projects.
Well, I think you've done it in the select board members are here. Herb's here, and he's on the coastal waters group. I don't know, with the wave attenuation device being covered by the coastal waters group?
Yes, it's in our marine infrastructure plan, but we haven't discussed it except in very general terms. The coastal waters committee tends to agree with you, Ernie. That we need a different technology there, but we haven't taken it out.
It's not having capital.
So my answer would be continue to discuss it with coastal waters. They're the committee that works on the funding for those projects.
Call Mark Dyer for the roads.
What I'm afraid of is that the town just decide to repair the waste rate that they had in place. And waste a lot of money on it, because it doesn't work, and I'm surprised at the amount of damage that's done over there every year. The citizens that use that facility inside the waste rate there, I'm amazed that they put up with thousands of dollars of damage every year. With a piece of equipment, the waste amplifier, it doesn't work, and I'm afraid that we'll just put more money into that and waste it rather than fix it correctly.
Yeah, I would suspect enough people know that it's an issue that wouldn't happen, but maybe I'm naive.
Mark's father wanted to fix it once and for all, and it wouldn't spring for the $6,000 that he wanted to fix the wave amplifier. And the town company spring for it. And Steve already called me up and said, what would you do? And I said, I give Bob the $6,000 and let him fix it. And so nothing was ever done with it. And it's deteriorating to the point where the slabs go up and down a little bit. They're all big wormy, you know. If anybody tells me they can ask to know, he checked it. And I'm just afraid that we spend a lot of money on that and waste it. It is necessary to have something there to protect the equipment and people's property. But what's there now is, when Dave Campbell was road commissioner, he had a road foreman here. The foreman who, the people who built it, with, like Pearl Marine. They told David, they said, no, we'll be back here in a year or two taking this down. And he said, why is that? And he says, because they don't work. We put up a facility that spent a lot of money on something that didn't work. I don't want to see that happen again. I like to see, first of all, something that actually works. Second of all, I don't want to see it the way it works. Yes, that's my question.
It's actually not budgeted in the infrastructure plan, so we can't spend any money on it right now. So I think we've heard you loud and clear, but we'd be interested in what you would, put there instead. And so I think that's a Coastal Waters kind of workshop, that we can make sure we get your opinion. And I also, just to kind of put things in perspective, we've been working pretty hard. We have an engineering firm working on the design for the stone pier. We hope to bring something forward to town meeting this June. It's a more modest plan than maybe what you've seen in the past. Because the estimate we got in 2022-23 was $18 million. So just to put that in perspective, that was just for the stone pier, and we could not afford that. So we had to go back to the drawing board, and we tried to take the most important elements and incorporate it into this design. So I just want to prepare people, and I think there was really no appreciation at that time whether or not $18 million was too much or not. And now I think we can all, with the work that the finance committee has done, you can kind of see a much more realistic picture of what is required. So, but just, that's kind of why it's really critical to have the finance committee do this work so that we can kind of move forward with some of these projects. So I really appreciate all the work they've done. It's something we've been trying to do for a long time, but it's super valuable. Yeah, very much appreciate that.
I'd like to ask for a standing ovation. As well.
Yeah.